Hi guys, Michael here. In this video, I'm going to be going over the age-old question, what is the best investment, stocks versus real estate? Now here in Australia, we love real estate. It's our property obsession. It's our national sport. And most people think the only way to get ahead in Australia is real estate. Unlike America, in Australia, investing in stocks is seen as risky and is a lot less popular and seems a lot more complicated. But I want to break down what really is the best investment right now. Now, just a disclaimer, this is not financial advice. This is just purely for entertainment and educational purposes only. I'm just going to weigh up the pros and cons and give you my opinion, what I think is the superior investment. Now, I have been getting a few comments lately. Michael, your videos are all doom and gloom. Why don't you do something investing related or more positive? Well, you want something positive? Yes. You want something that can change your life? Yes. You want something that can make you a multi-millionaire? Yes. What are you willing to do to get it? I'm willing to subscribe and tap the like button for the holy YouTube algorithm. Okay, you got it. Let's get into it. What is the best investment, real estate or stocks? Let's go. Okay, first things first, let's get into the pros and cons of real estate. And I'm going to try my best here to be unbiased and give you my unbiased opinion on the pros and cons of investing in real estate. Now, obviously, I won't be able to put in every single little pro and con in here, but I'm going to be going over the main pros and cons of investing in real estate and then investing in stocks. And then I'm also going to go on scenarios of if you invested in stocks versus if you invested in real estate. Okay, the first con for investing in real estate, in my opinion, is you have to use leverage to get better returns. For example, the CoreLogic's data over the past 25 years says the average return for Australian real estate has been 6.8% per annum. But a big reason why Australia has had crazy returns over the past 25 years is because the RBA has slashed interest rates from the 1990s of around 17% to just 0.1%. And for every 1% reduction in interest rates, house prices can go up around 10 to 15%. But now they can't slash interest rates like crazy like they did before, so I think returns are going to be less in the future. Another con for investing in real estate is if you invest in certain suburbs, all of a sudden the bank can say, no, you are investing in a high risk suburb. And we did see this with Westpac a year or two ago, where they sent letters to investors. They said, look, you've got a high risk loan or you're in a high risk area and you've got 30 days to find a new lender. So this just adds more risk, like leveraging, and also adds more risk of getting a call from the bank and saying, you're in a bad area, we don't want you as a customer anymore. Also, another con is you have to deal with tenants. You could get squatters, you could get tenants that don't pay. All of a sudden you could get the state or federal government change the laws like what they're doing in Victoria. So now tenants can make moderations to the home without your permission. So you have these risks as well. And like what we saw during the pandemic, tenants didn't have to pay and you couldn't evict them and you had to fork out the cost. Also, there are a lot of hidden costs and fees in real estate, like body corporate fees, maintenance fees, insurance, buying and selling. For example, when you buy an investment property here in Victoria, you have to pay 5.5% in stamp duty. So if you're investing in real estate, you're losing around 6% right off the bat in fees. For example, if you want to invest in the stock market, I'll leave a link in the description below where you can use Stake. It's an app where you can invest in the US and you pay no brokerage fees. You only have to pay a 0.7% fee from transferring your Australian dollars to US dollars. Also, if you use the link in the description, you can get a free stock valued up to $150. I'd never recommend something I don't use myself. This is what I use. And I do think it's the best app for Australians wanting to invest in the US market, which has had better returns. Also, investing in real estate, you have the risk of rising interest rates. You may have an investment property and be neutral cash flow or slightly negative cash flow and be able to get by. But if all of a sudden, if interest rates rise like what's happening in the bond markets right now, and interest rates go up 1 to 2%, you may no longer be able to afford the investment property and you may be forced to sell. Also, another risk for investing in real estate is falling rents. In inner city Melbourne and Sydney, rents have fallen significantly, in some parts over $100 per week. And this is another risk that may lead you to having to force sell your property in a downward market, and you don't have this risk if you don't have debt when you invest in stocks. Another con, in my opinion, for investing in real estate is stress. You have to deal with tenants. You have all these risks, like I just stated before, of rising interest rates, of debt, of dealing with banks. And what's really the goal for investing? In my eyes, the goal for investing is to create a nest egg big enough for you to one day live off and have a decent retirement and quality of life. And in retirement, you don't want to have stress of dealing with tenants or property managers, all these risks associated with debt that could come up in the future, where if you don't have any debt and you've just got a nice stock diversified portfolio, along maybe with some cryptocurrencies like Bitcoin and precious metals as well, you don't have to deal with that stress. Again, the actual real returns of real estate versus stocks have been lower. The average return of real estate in Australia, like I said earlier, is 6.8%, but the average return, for example, of the S&P 500 has been 10 to 11% over the past 100 years. Another con, say for example, if you've got $100,000 tied up in investment property, and then for some reason a situation comes up and you need $10,000. With stocks, if you've got a $100,000 portfolio, you can just sell 10,000 to take out that 10,000 and still have your remaining 90,000. Where if in real estate, if you want to get that money, you may have to sell the property altogether, or you may have to refinance and take on more debt to get that extra $10,000. But if your personal situation's changed or your employment situation has changed, you may not be able to refinance at the time. And what I think may be the biggest con to investing in real estate, and what really puts people off investing, I think, in Australia, is they think that you need, $100,000 to start investing, because really to invest safely in real estate in Australia, for a 20% deposit, say for example, on a $400,000 property, plus around 5% in closing costs, and you want to have a 5% buffer in case of any risk come up, expenses, or the tenant doesn't pay. And I know some people invest in real estate with no buffer at all, but that's just a disaster waiting to happen. Where with investing in stocks, you can start with as little as $50 or $100 with using some of these easy apps, like I said, with Stake, or even CommSec Pocket. That's another app I use just to invest in index funds in Australia. And you can start with $50, $100 and just set automatic investments. Also, another app I really like to invest my loose change is Raise. I've been using this for a couple of years now, so I do think it's safe. And like I said, I'll never recommend you anything I don't use myself. I've been able to save thousands of dollars over the past couple of years just by rounding up each transaction when you use your FPOS card, and then it'll just round that up, and once it hits $40, it just automatically deducts that from my account. I don't even really notice it, but every few months I'll look at it and notice that my account has gone up hundreds of dollars. So it's just another fun little way for me to save. You could use that money for holidays, or just keep dollar cost averaging over the years just to have another little portfolio there, or to invest for your kids. And I'll leave the link in the description. In March, they're giving a double referral bonus, so you'll get $10 if you use the app, and I'll get $10 as well. So it's a win-win situation. Another con for investing in real estate is you have to pick the right area and the right property, and there's a lot that goes into it. Also, it is less diversified. For example, if you've just got $100,000 to invest in real estate and that's all your net worth, all your money is going to one property in one area. If something happens in the area, like employment gets reduced, if crime rates go up, whatever risk happens in that area, all your money's in that one property in that one area. Or if crazy neighbors move in next door. Where with investing in shares, I can diversify across hundreds of companies, I can diversify over countries, and I can get instant diversification. So that's just another con for real estate, but another benefit for stocks is you can diversify. And not only that, I can diversify my $100,000 over stocks, precious metals, and cryptocurrencies to be even more diversified. Another con for investing in real estate is it's very hard to dollar cost average. Like I said, if you just got $100,000, you finally save that up and then you plunk it in at one time. You got to know, is it the right time to get in property at that time you invest? It's very hard to predict the market. No one can really predict the market. Where with stocks, you can take that $100,000 and, for example, over a 12-month period, just invest $8,000 consistently every month, because we know the key to investing is just dollar cost averaging over a long period of time and letting compound interest do its thing. Also, another con of investing in real estate is a long process for buying and selling. It can take up to 3 months, and there's a lot of paperwork, there's a lot of legal issues, there's a lot of phone calls. It's a very stressful situation. Where if I want to invest in shares, I can just pull out my phone, 30 seconds, okay, I want to buy the S&P 500 ETF, boom, 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 30 seconds done, no stress at all. Okay, so that's just some of the many cons of investing in real estate in my opinion. Let me know down below if I missed any. But let's get into some pros of investing in real estate, because there is some pros. So the pros is there is higher returns if you use leverage, but it's more risky. Say for example, if you put $100,000 in real estate, well then that means you can leverage it up to buying a $400,000 investment property. And if that investment property goes up 5%, that means you've actually got a $20,000 return on your $100,000, which is actually a 20% return. So it is possible you can get higher returns using leverage, but like with using leverage, it's a lot more dangerous, and you could also go into negative equity and lose even more than you invest if property prices decline significantly. Another pro for investing in real estate is you can use inflation to devalue your debt. For example, you can get interest rates now below 2%, and they say inflation is around 1.5–2%, but I believe inflation is a lot higher, at least 3 to 5%. So you can use inflation to devalue your debt, and that's what the governments and banks are doing right now. They're printing money because they can't afford to repay it, so they're trying to devalue the debt. Also, you have a bit more control. If you're a skilled renovator or developer, you can renovate the property possibly to get higher returns, or develop a property that is on a nice piece of land. But this is a lot more risky, and it requires a lot more expertise that not many mum or dad investors have. Possibly if you're a first home buyer, you can get into the market a lot easier. You don't have to pay stamp duty. You get a lot more incentives from developers. For example, if you got the 25K home builder grant, the 20K first home buyers grant, you didn't have to pay lender's mortgage insurance. For first home buyers that brought, 3 years ago, you could say, it was a pretty good investment, but again, that's debatable. Another pro for real estate is you can touch and feel it, you can see it, you can see that beautiful home, you can turn that rundown property into a beautiful piece of art. And for a lot of people, owning something physical like real estate and precious metals is a big pro for them. Another pro is tenants can pay off your debt, and there are a lot of tax deduction for real estate. You can negatively gear if you're on a high income tax bracket, and that's another benefit for investing in real estate, and it could take a neutral or negatively geared property into neutral or positively geared. And the last pro I have here is it's a lot less volatile. It can be pretty scary, like what happened in March when the stock market plunged about 40%, but in many places real estate only dropped from 5 to 10%. So it's a lot less volatile and gives you that peace of mind. So that's my pros for investing in real estate, but I do think there's a lot more cons than pros in my opinion, and let me know down below if I've left out any other pros for investing in real estate. Okay, now let's get into the pros and cons of investing in stocks. So first con is it's very volatile. Like I said, there can be declines of 40 to 50%, but the volatility can also be your friend, and it can create great buying opportunities like what happened in March last year. And for me as an investor, I'm actually a bit weird. When I see stocks plunging 10 to 20%, I actually get excited because it creates a great investment opportunity that you wouldn't get in real estate because it doesn't have that volatility. And it's kind of like going shopping where everything's on discount. Another con for investing in stocks is there's less control. You're pretty much leaving it up to the companies to run the company well, where if you're investing in real estate and you've got skills and expertise in real estate, you can renovate for profits and you can develop for profits. So you don't have as much control in stocks. But hey, if you're a great individual stock picker, you can maybe get more control there by picking some great companies. But for me, my investing strategy for investing in stocks is just investing in index funds, because even most professional investment hedge fund managers don't outperform the market over the long term. Another con for investing in stocks is you can't touch or feel it, you can't see it, you can't put it in your pocket. So that's another con, where real estate, you can see it, you can touch it, you can feel it, but hey, I don't really care if I can touch or feel it. I care about what's the best returns. If you want to get better returns like real estate and use leverage, it's a lot more risky in stocks because you have something called margin calls and the interest rates are a lot higher. So a con is it's a lot harder to use leverage to invest in stocks. Another con for investing in stocks versus real estate is a company could go to zero, but pretty much any property in any major capital city or major regional hub won't go to zero. There's also less tax deduction for investing in stocks. You can get the tax deduction for fully franked dividends, And also if you gear stocks, like gearing for property, you can claim tax deduction. And the last con I have, and let me know down below if I missed any for cons for investing in stocks, is the emotional roller coaster. People get very emotional investing in stocks because it is so volatile, and they may make a poor decision if stocks plummet 20% and then they sell because it's so much easier to sell. Where, for example, in real estate, it's a lot harder to sell. So if there's a drop in real estate, or you may think it's going to drop, then by the time you actually go to sell, things may have changed and you may have made up your mind, no, okay, I won't sell, and you don't get caught up in the volatility of the markets. Okay, now let's get into the pros of investing in stocks. The first pro, I think, investing in stocks is diversification and just really being more passive. I can invest in, for example, the S&P 500 and get diversified across the top 500 companies in the US. Or I could, for example, invest in the top 100 global companies using ticker symbol IOO. It's an ETF that invests your money across the top 100 global companies. And also I can invest in different asset classes. I could invest in a gold ETF or a silver ETF, and I can invest in Bitcoin. Not only am I getting diversification across stocks and companies, but I can get diversification across companies and different asset classes. Another pro is it's more passive. Just for example, a few seconds, I can buy stocks on my app on my phone. I can get dividends where it takes no work for me. I don't have to worry about tenants or landlords or government changing any regulation. So it's a lot more passive, and really that's the only true passive income is dividends. Another pro is you can dollar cost average. So for example, you may have $100,000 and you decide to invest it in property, but you may invest it at the worst time possible, where, for example, investing in stocks, I can take that $100,000 and dollar cost average that every month, invest $8,000 over 12 months. And even if I don't get the timing right, like I always say, investing for the long term and dollar cost averaging is the best way to go. Another pro is if I just need a small amount of my investment portfolio, say for example $1,000, I can just quickly sell a stock. Where for real estate, if I want to get access to any extra funds, I'll have to refinance or potentially sell the property. But with stocks, I can just sell $1,000 out of that $100,000 portfolio, and it's really easy and simple. Another pro is stocks have actually had a better return. Like I said, for example, the S&P 500 has gone up around 10% over the past 90 to 100 years, and the ASX All Ords have gone up around 12% with dividends reinvested over the past 100 years. Another pro, like I said before, it's a lot easier to buy and sell. We're just taking seconds for me to buy and sell on an app on my phone, compared to taking many days or months hunting for a property to invest in real estate. And a big pro is you can start investing with a small amount. Like I said earlier, there's $100 or $1,000, so you can have your money start working for you a lot sooner, compared to it may take you 10 years to save up $100,000 to finally invest in real estate. Where investing in stocks, you can have your money start working for you immediately. Another pro is it doesn't matter if your employment situation changes, or for example, if you want to go part-time or casual, where for example, investing in real estate, if your situation changes, you may no longer be able to refinance or qualify for a loan. And another pro for me is there's no real moral hazard if a stock goes up 300%. But for example, if house prices in my suburb go up 300%, then that means people that have lived there for decades or generations can no longer afford property in the area, and they're going to have to move, and it creates that moral hazard there. Where with stocks going up 100%, it doesn't have that moral hazard. So that's just some of the many pros and cons of investing in real estate or stocks. Now I will go over some scenarios on how a stock market portfolio will compare to investing in real estate. Okay, so now let's go over a scenario where just an average Joe, all he's got is $1,000 every month left over that he can save and invest. And let's go over the scenario where he just starts off by investing in index funds, and say for example the S&P 500. And again, I'll leave a link in the description to my favorite app for investing in US shares stake, something I've been using. And if you use that code down below, you can get a free stock, either GoPro, Nike, or Dropbox, valued up to $150. So let's say, for example, this average Joe just invests $1,000 a month. He doesn't try to time the market or predict the market. He just invests $1,000 every month consistently for 10 years. And he gets that average rate of return of 10%. Let's see what his portfolio is after 10 years. So that's right, after 10 years, his portfolio would now be $193,000. Pretty awesome, and a pretty good chunk of change. And hey, if he wanted to, after 10 years, he could decide to invest in real estate or buy a property if he wants to. But now let's go over to for example, the same guy, he wants to invest in real estate, but he doesn't have the deposit. So he's going to save every month for 10 years. It's going to take him 10 years to save up $100,000 to finally be able to afford to invest in real estate. So now after 10 years, he's got $120,000 to finally invest in real estate. But now there's just a big issue. There's a lot of fees invested in real estate. For example, in Victoria, you've got 5.5% for stamp duty, you've got conveyancing, legal, pest inspections. So let's say it costs 6% to buy. And then say, for example, he takes on the expertise of a buyer's agent because he doesn't really know how to find the perfect investment property. So that's another 2%. So he's losing 8% right off the bat when he invests in real estate. So that means his initial deposit of $126,000 is now only worth $94,000. So he's $100,000 worse off by trying to save to get into real estate than the guy that just dollar cost average and invest in index funds, stocks, precious metals, and cryptocurrencies. Now you may think, look, investing in stock market is risky, especially now at an all-time high, and it's going to crash soon. It's going to crash 50, 60%. But I want to go over and prove to you how powerful dollar cost averaging is and investing for the long term is, and how trying to time the market is the worst thing you can possibly do. So I want to go over 3 scenarios to prove to you how powerful just dollar cost averaging is and timing the market instead of timing the market. So for the first example is Tiffany saves $200 per month in a savings account, earning 3% interest, waiting for the perfect time to invest. But it turns out Tiffany has the worst timing. She dumped all her savings into the market on the day before the 4 biggest market crashes, but she never sold. But even with terrible timing, thanks to her buy and hold strategy, Tiffany has turned her $99,000 into $733,000. So even though she bought at the worst possible time, she still had a 700% return. Now let's get into the second scenario, Brittany. So Brittany also saves $200 per month in a savings account, earning 3% interest, waiting to buy at the perfect time. It turns out Brittany has the world's best market timing. She bought the day the market was the very lowest after each of the 4 crashes. So she had the absolute best timing ever. She's the best investor, even better than Warren Buffett. Let's see her investment returns. So she's able to turn her $99,000 into $1,123,000 by timing the market absolutely perfectly over the past 40 years. But can you believe it? Sarah, who's just an average Joe, she doesn't know much about investing. She doesn't follow the stock market or the news or get involved in all the hype. Let's see how she performed. So Sarah didn't have much interest in watching the market or trading. In fact, she only did one thing. On the day she opened her account in 1979, she set up a $200 per month auto investment in an index fund and never looked at her account again. And guess what? Sarah, who just bought and held and just dollar cost average, guess how much her portfolio is worth today? $1,620,000. Guys, this is the key. This is the key to wealth and riches and abundance. And I know it may sound corny, but it truly is. Trying to get involved in timing the market and being the next guru and Warren Buffett, you're gonna get wrecked. So what would happen if you invest $1,000 every month for the next 30 years at an average rate of return of 9%? Your investment would be $1.6 million. You'd be a millionaire. Hey, $1 million might not be a lot of money in 30 years, but I'm sure every year you'll figure out ways to earn more income and increase your income, and hopefully you can adjust for inflation by increasing the amount you invest every year. So guys, you wanted something more positive, you got it. You wanted some life-changing content, here it is. Just dollar cost average, invest every month, don't get caught up in trying to time the market. And hey, if you can't afford to invest in real estate, you can start from as little as $100 today investing in shares. And literally, if you just do that for the next 30 or 40 years, you'll be in a much better position than the average Australian that just spends everything they have and are too fearful to invest. Many people are saying just holding cash right now is the most risky investment because central banks are printing money like crazy and devaluing your money. So investing shouldn't be scary. Really, not investing and not preparing for your financial future should be the most scary thing. So guys, I hope you got a lot of value out of this video. If you did, please tap that like and subscribe button. I'll keep you all up to date on the latest that's happening here in the Australian property market. And I'll also drop more gems like this on really how you can transform your life and transform your personal finances. So thanks for watching. I'll put up some of my other videos here. I'll see you there.